I'm Denise Ko Genovese, Associate Editor of Unquote, and I'm here at IPEM in Cannes with David Arcauz from Flexstone. David, with so much innovation and so much change as well as competition in the mid-market at the moment, what do you think the main challenges will be for the next round of fundraising?
I think there's two sets of challenges I think that GP is going to face in the next fundraising cycle. I think the first one is probably homemade challenges. GPs, when they're going to hit the fundraising trail, are going to have to be ready in terms of how they structure the team, whether there's any succession issues, whether they have the depth of bench they need to be able to fulfill their strategy. They're also going to be facing more choices on the size of the investors, so they're going to have to position themselves properly. Again, in terms of strategy, they're also going to have to be able to prove that if they want to increase the fund size, they have made the investments for that. So I think as the mid-market in Europe is more and more buoyant, we see more and more opportunities from the GP side with existing firms, but also new launched managers. People are going to be more picky. They're going to have more choices, as I said, more selective. So they're going to be almost to have a higher selection rate and also concentrated. I mean, all of us start to concentrate a little bit the numbers of relationships we have to put more money at work with the GPs we like. Also in co-investments, for example. So I think GP has to be ready for the next fundraising cycle, how they put their house in order. I think the second set of challenges are beyond the control of the GPs themselves, which is first of all probably the macro uncertainty. We see with Brexit, there's been some rumors about Italy as well. In France you have the Gilets jaunes. So I think this is something they're going to have to live with. They did it in the past, in 2008. Until 2012. So again, they can adjust for that, they can prepare, but they cannot control it. So that might trigger some, maybe reduction in appetite for Europe mid-market. I don't think people are going to vanish. I think people might be, again, more selective, and we see a bifurcation in the fundraising environment. And there's also an issue linked to the popularity of private equity as an investment asset class. We see a lot of money coming from abroad still in Europe. People are not that sad. There's a lot of money. Sometimes we discussed in the panel earlier, cost of capital might be a bit lower. So in general, people are going to face more pressure to deploy. Prices are high. So they're going to have to keep the discipline while still prove to people they can deploy that money. So all these challenges need to be addressed before hitting the fundraising trail.
And do you think with the increasing competitive environment, especially for highly priced assets and the valuation soaring, LPs might begin to rethink their allocation to the private equity market?
We've seen some evidences recently, first of all, it depends where you are in your program. I mean, we see new clients coming live now into the asset class, especially in Switzerland. They start to embrace the asset class in a more wider way. I think there the question is it a good time to come? Shall I wait? What's going to happen? And usually our recommendation is, you need to be consistent to build a portfolio and not to be too much trying to time the market or to be too cyclical. So I think people when they come in, they're going to come in for the long term. And Neil McDougall said something very right about, the accumulation of wealth and money to be spent by insurance companies and pension plans. So there's an appetite, a fundamental appetite for the asset class, which is also creating some issues. What we see is more sophisticated people who are already fully invested started to take some chips off the table. We've seen in the US, we heard about rumors of people reducing allocation. I've seen that in Europe as well, especially in Switzerland. So you will see some people getting a bit more queasy. I don't think they're going to leave the mid-market completely, but they're going to start again to make some choices. They're going to start to, there's a larger supply of managers, so they're going to be more selective. Be sure that the people are, as we said, ready for maybe a much tougher environment. And something we said on the panel, which I like a lot, is about sourcing. Executing a transaction is almost a commodity now. Everybody can execute a transaction. The problem is how you source it, how you also make sure that you pay the fair price, even if it's expensive for good assets. So I think all these things, we as LPs are going to start to look at it in even more detail, and we're going to have to make choices. I think we're going to have to make choices with the relationship we have since a long time, because maybe the people didn't adapt to the current environment. And also whilst looking for younger managers to bring some new blood to the portfolio. So I think it's a more complex exercise we have to do than maybe 5-10 years ago.
And in conclusion, in terms of mid-market Europe, would you say that it's still a good place to invest in?
I think it's a great place. I think if our clients, what they love is to have access to the SMEs in Europe. Exporting companies, good in their sectors, can be healthcare and technology, industrials. There's no way you can access it from the public markets. I mean, it's not like the US where we have the Russell 2000. We don't have this in Europe. So I think to access that backbone of the European economy, which is still the second biggest trading bloc, I think it's very important. So I think there's still going to be demand. I think that's not going to change, that's not going to go away. But again, you're going to have to pick your spots properly. You know, it's becoming more